Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. Today I want to tell you a story about somebody that I fired at my trading firm who we hired to trade our capital. It was back in 2009, in that area, right after the market bottomed and we started to head back up after the financial crisis. So basically January through April of 2009. What ended up happening was this trader from another firm came over to our office just out of the blue, and started showing us his profit and loss statements and said he wasn't happy at the firm he was at, and he had some pretty big runs, as they're known in the industry, where he'd have these big months, and then when he lost money, it really wasn't huge, at least according to what he showed us. He didn't show us his actual statements. He showed us spreadsheets, which that should have been my first warning, right? So we made a couple of calls, and everybody's like, yeah, he swings a big line, that kind of thing. But nobody was saying anything more than that. So after about 10 meetings, because we couldn't really even get rid of the guy, he was very convincing. And at that time, we were like, yeah, sure, let's bring on somebody who's a big money maker. The downside is worth the upside. So today's video is about respecting profits. We spend a lot of time talking about respecting risk, and that's ultimately how you stay in the business, so you get to the point where you learn how to make profits. But today we're going to talk about that it's real money. And this guy's name, let's just call him Jason for the sake of the conversation. We negotiated that his daily stop loss was $2,023 per day. So that was how much he was allowed to go negative during the day, which, in case you don't know, that's a big thing in prop trading, where you're managing somebody else's money. You always will have a daily stop loss, and then a weekly cutoff point, just because when you're trading someone else's money, you can get angry and you don't feel the losses as much if you're not trading well. And it's very easy to go through that number and lose a lot more than you agreed to. So there has to be like a really hard stop number. So anyway, we were doing a seminar in Chicago with sometime within the first 2 or 3 weeks of us hiring Jason. And our office manager, Mario, had called us during the day after the seminar and whatnot. And Mario had said that Jason hit his stop loss point today. So we cut him off and he stopped trading. And we're like, all right, that's what we agreed to. That's fine. So he lost $2,023. The $23 is he was a Michael Jordan fan. So anyway, the next Monday we come back into the office and we find out that Jason was positive $7,000 that day. So let that sink in for a second. He was positive $7,000 that day, ended up the day losing, as a day trader, his accepted stop loss limit, but he lost $2,023. So he had a $9,000 negative swing. And at no point did he think to stop and say, I don't have this is going in the wrong direction. Let me book some of these profits. And you should take out of this that something we talk about during the day is this is real money. A lot of traders come to the business or to the active trading side of the business where they want to make some good extra money, which is awesome. That's the whole point of the boot camp. That's the whole point of us being together, even in these videos, where you really want to get to the point where you are in control of, I know what I'm looking at, and if I do what I'm supposed to do, I'm going to get paid. But there's a big difference between if your aspiration, which most of those same people are, if your aspiration is to quit your job and eventually get to the point where you're living off of that money, you have to start in your mind. You have to start out saying, I need some profit targets. I need to know what a trade needs to look like in the direction that I expect it to go. Everybody can identify that stop loss. We'll get back to Jason in a second. If you know your stop loss, that means you have to be able to know where you expect the trade to go. It's not going to go to infinity. It sounds awesome to think that that could possibly happen, but you need a return on that risk. You need to understand that risk reward. You need to understand what is a potential move if the stock moves in your favor, and what's acceptable reward for that risk that you're taking. And here's the thing that I'm training everybody in the boot camp to really think about, is that when you have a trade let's just say for argument's sake, you're up $5,000 on a trade as a day trade, or even as a swing trade. It doesn't make a difference. At some point, you have to say, I'm walking out of here with 4,000 or 3,500 or whatever the number is. If you're not trading, if it starts to move back against you, or if the market changes, the stock changes, it's real money. 3,000 here, 4,000 there, 600 there, lose 1,000 there. All of a sudden, at the end of the month, your account just keeps going higher and higher every month because you're respecting that it's real money. It's not play money. Just because it's digital, it's not play money. If you had $5,000 in your pocket and I take it out of your pocket, you're going to get pissed off. But for some reason, too many newer traders coming into the community don't have this sense of clarity that it's real money. If you get $1,000 dropped in your pocket in an hour, if you have a stock that you're trading and it goes up 20% in one day, which is very common right now, amazingly common, and amazing that it even happens, because that didn't happen when I first started trading. It was actually tradable during the day that it goes up 20%. It's real money. Start treating it like it's real money. Start treating it like it's, wow, that's a car payment. That's a mortgage payment. Now, again, I am not saying cut your profit short. That's not what I'm saying at all. I am talking about if you're not trading, if you're not in tune with the market anymore, if your stock is clearly turned around, or if the market's clearly turned around, you need to have parameters. You need to have a target. You need to understand a trailing stop loss. You need to understand either a dollar trailing stop loss, a percentage trailing stop loss, a dollar amount you want to take home trailing stop loss. So I'm imploring you, don't do what Jason did. So we ended up coming back to the office, and I said to Jason, I said, you had a $9,000 negative turnout. Explain your thought process to me. And he said this, and it's something I'll never forget. He said, I don't understand what you're angry about. I lost what I'm allowed to. I said, Jason, I don't think this is going to work. He's like, I don't understand. He goes, this is what we agreed to. I said, you gave back $9,000. I said, you were up a lot of money and you turned it around and you went all the way down to your maximum negative loss, which also leads me to believe that if we didn't have that number, you would have kept losing money. And he just didn't understand it. And it wasn't somebody that we really wanted to be associated with anymore. So we had a clause in the contract of certain types of behavior and whatnot. And Jason ended up blowing out of the business because he didn't respect the fact that it's real money. He didn't respect the fact that you need to understand what your losses are, but you absolutely have to have an idea of what a profit should look like if the trade moves in your favor. So I'm encouraging you to really think through what we teach. And when you're in your trade, have projections, have strong ideas about if the trade and when the trade moves in your favor. What does it need to look like for you to consider, okay, my stop loss is here on my initial entry, and then as it moves in your favor, at what point do I move this up to a break-even stop so I no longer have any risk in the trade other than commission? So move far enough in my favor where I'm not in a losing position anymore. If I get taken out, the terminology is I get taken out for a flat. You say I took a flat on the trade. So there's two things when you say flat. A flat means that you broke even on the trade, or a flat means you have no open positions. So you moves in your favor, goes up to a certain point. Now it's a flat. Now we talk about it in detail in the boot camp when to do that. And if you're not sure, just ask me if you're in the boot camp. But then at some point, the trade reaches what you might call your profit target, or somewhere in your area where it's acceptable reward potential for the risk that you had to take. At that point, then you have to start saying to yourself, am I adding in this piece? Am I going to look to move up now my trailing stop? If I move it up, how am I going to use it? Is it going to be a moving average crossover system? Is it below the previous candlestick? Is it a certain dollar amount I want to keep if it starts to pull back? Or are all of the market conditions really good because you understand order flow and because you understand tape reading? Or during that pause or pullback, is everything lined up perfectly and the stock has further room to go? Should I be adding to that position? All of these things are what separates somebody from being a chart reader who struggles and never gets paid from somebody who aspires to actually be a tape reader and ultimately a trader who understands how to put these pieces together. So I want to encourage you. The downside of the trade is super easy. You can look at a spot in the chart and be like, that's my stop loss, right? But you need to really think it through to the upside and say, if this thing starts to fly in my favor, what is the likelihood of it hitting a level and either stalling or even pulling back? And especially as day traders, you see this, where we actually had a few trades yesterday where we put the trade on, outlined the 3-to-1 risk reward ratio. And again, that 3 is the minimum target for accepting the risk, especially in the day trading environment where you enter here, it goes up, spikes up really fast. You don't take the profit because you don't know how to do what we're talking about right now. And it floats all the way back down to your entry price and you're angry. That's the day trading market that we're in right now. That's the day trading environment. So you have to know the conditions of when you should get out into the move, or the conditions of when it should be, I'm going to keep adding and holding this because it's a slow grind higher. So don't be like Jason. Learn to act like a pro and set targets and learn how to set those targets and then actually take action on that plan. It's unforgivable to turn a positive $7,000 trade into a negative $2,000 trade. I understand his thought process, but it wasn't his money. It was my money. I want him to make me money. I want to see his account grow. Now, it's not going to grow every day. It wasn't my expectation of hiring him. However, being reckless was absolutely not my expectation of hiring him either. I want him to act like a professional and respect both sides of the trade, so both of our accounts can go up higher and higher, because at that time there was different circumstances of what the trader got paid and what you got paid. So I encourage you to take that next step in your trading. Take the questions that you have in your mind and put them out on the market and say, if this thing moves in my favor, where would I consider getting out? At least ask the question. And then if you're in the boot camp, dig deeper and start to ask, how do you do that in a much more structured way? You'll be pretty happy you did, because you don't need to catch the bottom and you don't need to catch the top. Professional traders don't do that. Professional traders, most of the time, are selling on the way up when they think the stock is extended, or have a number on the way down where they say, if it gets down to that, I'm okay with that. That's where I'm going to get out, because I did everything prior to that, which is the hard part of the trade. So if you have any questions about this, definitely think about, let me know below the video. Think about it. Let me know below the video, and I'll be more than happy to get back to you. Have a great day, everyone.